Welcome back. After two massive sessions for NIO, the stock finally took a bit of a breather today. On July 23rd, NIO dipped just under 2%, closing at around $4.92 after briefly touching intraday highs above $5.20. But if you've been following this series, you'll know this isn't weakness. It's actually exactly what you want to see after a sharp move up. So let's take a look at what's happening here, because beneath today's red number is a continuation of the same story we've been tracking for weeks. A story that, in many ways, is just getting started. To quickly recap, NIO jumped more than 10% on Tuesday, a move fueled by bullish sentiment around the official unveiling of its new Onvo L90 SUV, rising trading volume, and renewed attention from analysts and institutions. Monday's session had already seen a nearly 3% gain, and the last few trading days were filled with excitement. Momentum traders, short covering activity, and long-term bulls all joining the rally. Now here we are, Wednesday. And after such a fast run, the stock did what many expected. It cooled off. But it didn't collapse. It didn't reverse. Instead, it opened strong, traded as high as $5.24, and then gradually pulled back as broader market energy shifted. All this happened on volume north of 100 million shares, still extremely elevated. And that tells us something: people are still watching this name very closely. The big event today? Test drives for the Onvo L90 officially began. And that's no small thing. This is a three-row electric SUV aimed squarely at the family market, a segment where NIO has never really competed before. Test drives offer more than just consumer access. They provide media coverage, early user impressions, and a preview of demand ahead of the official delivery launch next month. If those early test drive reactions are positive, and if reservations begin to build quickly, this could become a major catalyst in the weeks ahead. Now here's the part that ties directly back to our ongoing narrative. NIO is no longer just selling premium EVs, it's building an ecosystem. That includes not just the vehicles, but the infrastructure and the customer experience surrounding them. The battery swap network continues to expand. We know that over 3,100 swap stations are now active in China, and that many are already breaking even in high-volume urban areas. The partnership with CATL, China's largest battery producer, adds fuel to the fire. They've invested in Miratari, NIO's battery swap joint venture. That adds credibility and scale to the entire infrastructure play. What we're watching is a company that's taking control of both the product and the refueling experience, a vertically integrated strategy that's rare in this space, outside of Tesla. But while Tesla focuses on fast charging, NIO is going in a completely different direction: faster swaps, seamless service, and battery-as-a-service subscriptions that generate recurring revenue. And now with the Onvo L90, they're targeting a wider demographic: families, commuters, and more budget-conscious EV buyers. Meanwhile, let's not ignore the short interest dynamics. The squeeze we discussed earlier in the week hasn't fully played out, but it hasn't gone away either. NIO's short interest still sits around 9 to 10% of the float. Borrow fees remain elevated. And with daily volumes now regularly topping 100 million shares, it doesn't take much to trigger fast price movement. If we get a surprise headline, early pre-order numbers for the L90, or a bullish analyst upgrade, we could see another round of sharp upside. Now, stepping back from NIO for a second, we do need to talk about the broader market context. Today's dip in NIO wasn't just about the company, it was part of a wider pullback in growth and tech stocks. At the same time, some of the big American auto names like GM actually saw decent gains, fueled by trade headlines involving the US and Japan. So this wasn't a NIO-specific rejection. It was more like a sector-wide pause after a powerful run. And let's be honest, after a 10% gain in a single session, even the strongest stocks need a breather. That's healthy. It gives investors a chance to reassess, it allows late buyers to enter on a pullback, and it sets the stage for stronger, more sustainable moves going forward. What we don't want is a parabolic rise with no foundation. That's not what we're seeing here. We're seeing volume, fundamentals, product developments, and infrastructure all working together. So what should we be watching over the next few days? First, watch the test drive headlines. If media outlets or local EV bloggers start posting favorable reviews of the Onvo L90, that could light a new fire under this stock. Second, keep an eye on any pre-order announcements. Even a ballpark figure, 10,000 or 20,000 early reservations, could drive a strong narrative heading into August deliveries. Third, watch for more infrastructure updates. If NIO or CATL reveal expansion plans, regional break-even progress, or international battery swap developments, that would reinforce the long-term vision. And finally, watch the volume. If NIO holds strong volume above 70 to 80 million shares per day, that means the market is still engaged. To sum it all up, today was a rest day, not a reversal. NIO is consolidating after a powerful two-day rally, and the underlying story is only getting stronger. Fundamentals are improving, infrastructure is scaling, new models are launching, and short interest remains elevated. The test drive rollout adds a new real-world layer to the excitement we saw earlier this week. Thanks for watching. I'll be back with another update soon as more headlines and data emerge. Let me know in the comments, do you think this is just the start of a bigger move for NIO? Or are we nearing the top of this latest rally? Either way, stay sharp, and keep your eyes on the road ahead.